Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. After a big drop on Thursday, it appears that corn is putting up a pretty big rally after having hit support at our 360-degree price level. As the market makes its rally, it is recovering all of the losses from Thursday. The 360 price threshold has long been a very important level for the markets. As you can see over the past several months, we can see where the market has had some key levels of support and resistance coming through that area. Most recently, we had a time factor coming in where the market made a low, made a bounce up against resistance, and once again is testing support near 360. If this market's able to continue in this fashion, especially since we're now very close to one of our time factors, a retest of previous highs is possible for this market, but the flow for early next week is going to be key. If the market breaks back below this 360 number, we do believe that a retest of previous lows is perhaps probable, so it's going to be very important to see the way in which this 360 holds up over the next several days. After reaching volatility-based resistance, we did get our typical correction where the market did move down for about 5 to 8 trading days. But after doing so, we did once again find that support coming in at 360. In addition to that, we have our sinusoidal wave that came in as very good support as well. We closed the week with the market finding resistance near our 270-degree mark at 369 and change. So now what remains is the potential for follow-through in the coming trading days. For the March corn contract, it was the time factor that came in that gave us this strong reversal that we did see. After having posted a very strong low on Thursday, we see the move up on Friday, and the chart pattern is very much similar to what we saw for the December contract. The market made a very nice advance, and the corrective move that we're seeing here is only about 38%, which technically is bullish. So again, if the market's able to have some follow through, we anticipate retesting previous highs at the very least, with the potential of reaching somewhere in the neighborhood of 395. If the market returns to weakness next week, then a retest of previous lows is going to be key, and so the lows from Thursday is going to be the key support level that we'd be looking for the market to potentially break. January beans moved up in sympathy with the advance that we saw in corn, although its advance was nowhere near as strong. The advance that we're seeing from Friday is inside of the range from Thursday, and the market continues to look as if it wants to have continued weakness. We do have a continuation pattern setting up as of yet, and so what we'd be looking for is the same downdraft that we saw occurring for soybean on the way in, is what we'd be looking for on the other side, especially if it were to break our point of control level of 851 3/4. So upon breaking 851 and change, we do anticipate another fast potential move to the downside where the market could very well test previous lows. And we do have a potential target objective coming down at about $8 to $8.10 for the January contract. Part of why the high in soybean was significant is because it came in up against our 1x1 angle in conjunction with our arc swing. Upon coming into this level and squaring out, we saw a very nice push to the downside. We also had a time factor coming in where the market looks to give us a small bounce, but we anticipate that resistance somewhere in the neighborhood of 868 to 870 is perhaps going to contain this market here. So even if we were to see a bounce or a bit of follow through over the next couple trading days, we do anticipate a retest of previous lows. A surprise rally comes at the hand of the December wheat contract. After the market came in and made a low right up against our point of control level of 487 1/4, the market made a huge reversal, eclipsing the losses from Thursday and even venturing into some of the move from Wednesday. The December contract now has eclipsed previous lows, and in doing so, we do have the potential for a low coming in because the market is showing some signs of divergence. We do think that we could very well continue lower, but the strength of this reversal on Friday was significant, and if the market's able to make its way up to the next level or to the next point of control threshold of 519, we do believe that a move upward to about 540 is still in the works potentially for the wheat contract. The breakdown in wheat over the last couple of days did post for us an end band, suggesting that the market could very well be at its end point in terms of a downward move. And so given the fact that we did break previous lows, this could very well be a key significant factor for the wheat contract. Again, making its way back up to 519 is going to be very important. And what we had been looking at before was the series of higher lows that had been made. Had the market been able to hold that low here, we would have seen a nice advance to the upside. Instead, it broke previous lows, and in doing so, we did anticipate that the previous low from back in September would be retested at the very least. Currently, we have that very nice reversal that we're looking at, so the market needs to regain some strength. And in doing so, that would give us the impression that the initial impulse move to the downside is now followed by a final impulse leg to the downside. And giving us these two main impulse moves, we can in fact see a bit of a correction to the upside before continued weakness could set in. But again, these key levels are going to be very important for the wheat complex in general. The March wheat contracts gives us much of the same, with the market coming in very close to its point of control level of 505. And reaching a low that eclipsed the prior major low from July signifies the potential for a final low coming in, although just one day does not make for a terminal move in the markets itself. We would like to see what kind of follow-through we do have, and upon seeing some more follow, will give us better insight as to whether or not the market is prepared to move higher, or if we're looking for lower prices and perhaps coming back down to test somewhere in the neighborhood of 480. The US dollar found some strength this past week, coming up to retest previous highs near 96.64. Now that the market has made its way back up to the previous highs from July and August, we can then see the potential for correction. Now, in the event of a correction being produced right now, the market would give us a double top in this area, although this double top could very well not last very long. One of two things is what we would anticipate occurring for the US dollar. One, if the market's able to continue higher and perhaps make it to our volatility-based resistance area near 98 and change, this could very well signify a significant high, from which point we could see a correction. If the market were to terminate its advance at this level here at 96.65, then the correction that we'd be looking for perhaps would come in somewhere near 93, and we would be looking for one final high that eclipses these previous highs at the very least. And so regardless of what the market does from this point forward, our anticipation is that the market's looking to make a challenge upwards of $98. The weekly chart tells us much of the same, and what we're now seeing is that our volatility-based resistance bands are coming in near that 98 mark. So even though the market has come in and given us a very big, nice move to the upside for the week, we like the potential for this market to continue slightly higher to test these levels. So whether or not we see a move back down over the next week or two that retests the 93 number and the market turns up from there, or we simply continue higher from where we are right now, it does appear that the probable next major price horizon for the US dollar appears to be near the $98 mark. Thank you so much for joining us for our regular market update. Look forward to touching base with you again next time.